Hi, this is Kerry Artek with Wicked Stocks bringing you the daily Apple report for Wednesday, February 8th, 2023. Before we walk through the charts like this one, I just want to encourage you to please click like each and every time you watch the daily Apple report or the daily Tesla report and subscribe to the Wicked Stocks YouTube channel. It'll provide you notification each and every time new content has been uploaded. That includes the daily Apple and Tesla report. And if you would share the content with friends and colleagues. I also want to mention that on wickedstocks.com, a full subscription provides you the daily Q, the daily SPY, weekly S&P 500 index, weekly NASDAQ 100 index, weekly TLT, that is the long U.S. Treasury bond ETF, and 2 individual stock picks every week. And in fact, today, I'm talking Tuesday. I always record these a day earlier, right after the closing bell. The Apple analysis is performed for the next day, for Wednesday. But on Tuesday, we did put out a Google analysis, a detailed Google analysis, Alphabet. You may be interested in that. It's presently testing a significant area that has consequences into the second quarter. So anyway, on to Apple. I like to start with the big picture and work our way in. About a month and a half ago, we tested a targeted zone of long-term support in the lower 120s, and we came off of it nicely. Following that test, I'd mentioned how the low 170s were a realistic possibility as we moved into later year. They are now a likelihood. They are now expected. On the way up, I was mentioning how what is now in the 139.82 to 144.70 region could perhaps contain buying on a monthly basis, and we may fall off from there or may have fallen off from there into March trade. That obviously didn't happen. And about 4 or 5 trading days ago, we gapped above this area. This was an earnings report, as I recall. Actually, the day before. Now, that was a Fed issue. Sorry, I'm babbling here. But the day that we gapped above all that 144.70 channel top was, I think, the Fed, as I recall, last week. And then we had earnings and so forth and so on. And we are on our way to what is now considered a realistic 3 to 5 month objective at 173.16. And what occurred actually on Tuesday was the fact that we also closed by a hair, but still nonetheless a clear settlement for the first time above this 153.90 channel top. This has been anticipated, but what was allowed was the possibility of topping out at the 153.90 channel top, backing off into the 140s, and trading inside this band for a week, 2, 3, who knows. That hasn't happened. We closed above 153.90 on Tuesday, and now we have a 1 to 2 week target. I think it could be within 3 to 5 days, perhaps, into the low 160s. So 153.90 I've had weighted as a 2-star level only because of the anticipated violation of it. At one point, it was a 3-star level, but now it's 2. I didn't want people getting hung up on a short sale at 153.90 because I was anticipating a settlement above it. We closed above it on Tuesday, and now by the end of next week, we should push into the low 160s. 160.49 is a 5/8 Fibonacci, AB here, A being the all-time high from, I think that was December of 21. And B, of course, is the January pullback low. 161.35 is a descending 2/3 speed line. This zone can contain weekly buying pressures. If we happen to test it, say, between now and the end of next week, which is expected above 153.90, it can contain weekly buying pressures, and we could fall off from here for more than a week. Closing above 161.35, this targeted 173.16 is probably just 2 to 3 weeks away from being realized, where this market can actually top out, possibly on an annual basis. Hi, if you enjoy watching our daily Apple report, you'll love our daily Triple Q and SPY reports. They're presented in the same 5 to 10 minute video format. Our daily SPY and Triple Q analysis provides directional market signals that are correlated with highly specific price support and resistance levels. Whether your trading time horizon is short or longer term, we promise you a distinctive edge in your trading of the SPY and Triple Q. We offer a 5-day, no questions asked, money-back guarantee. So go to wickedstocks.com right now and start receiving your daily SPY and daily Triple Q reports today. So talking options, talking positions. Now, you know, if you've been watching the Daily Apple Report, it was the settlement above 144.70 that clearly indicated 173.16 sooner than later. And we did Tuesday close above 153.90. So this is a swing trade here, 153.90 up to 161.35. This is the 1 to 2 week dynamic, and that is likely now into the low 160s. If we close today back below 153.90, this market is susceptible to falling back into the mid 140s again. Now, there are other things going on with the charts, and I'm going to jump into this right here, 147.83 to 147.98. I think this is the more aggressive downward pivot. So if we, and I don't see this happening today, I'm just covering it in the event of we close below 147.83, yes, 144.70, that channel structure, then likely probably tomorrow, but over the next week or two, 136.77. And as it turns out, this 136.77 is rising at a pretty decent rate, and it actually almost already correlates with this descending 1/3 speed line. So we'll take it one day at a time. I don't expect to see this scenario, but let's put it this way. If given the opportunity to buy the 147 handle support, I think that's a good play as we move into later February, March trade. But I don't see this happening. Holding above 153.90, I'm actually expecting secondary buying pressures, wrong chart, secondary buying pressures to play out. Where are you? There you are again. I'm expecting, as I say, secondary buying pressures to yield the low 160s by the end of next week. If we close below 153.90, this 147 support is likely within just a couple of days where we could actually, as I said a moment ago, bottom out into March trade. This is kind of a one day at a time in terms of our aggressive downward pivot point, because we could get a washout if we close below 147.83, which is the low of the high still from a few days ago, and 147.98 is our rising channel bottom that includes trade over the last month or so. So closing below 147.83, I don't see a good reason to be long this market if your time horizon is over the next 1 to 2 weeks, because I think this market can fall to the 2/3 speed line at 136.77 within 1 to 2 weeks of closing below 147.83. I don't expect to see this. As I say, this is our downward pivot point into later February. Our upward pivot point into later February was actually just cleared on Tuesday's close. I don't know why I'm having trouble finding these charts, but here it is. So we are in an up pivot mode right now, once again, into the low 160s. We turn down pivot if we close today below 153.90, but just for a day or two before testing this meaningful zone of support. So I think I'm going to leave it at that. I don't want to flesh out any more other than the fact that all the minor points have been carefully chosen. We close at 154.65. 157.50 is an intraday resistance area. I probably should mention that. If we happen to push through 157.50, we just might reach that low 160s. Where are you again? Within the day. I don't expect to see that actually. I think what is likely is holding above 153.90, 157.50 in reach, where we could top out through the rest of the day. If we close today above 157.50, 160.49 to 161.35 likely tomorrow, where we could top out through next week, possibly longer, and closing above 161.35, this 173.16 3 to 5 month target, which became a 3 to 5 month objective just about 4 days ago above 144.70, is likely to be realized within 2 to 3 weeks. What a rally we're in the midst of right now, and secondarily above 153.90. I'm going to leave it at that. Nothing else to say for Wednesday's Daily Apple Report. Please click like if you would and subscribe. I'll be back tomorrow with Thursdays. You have a great evening.